All right, so here we have ES and NQ going into this is on bar replay mode, going into market open. So going into the day, really what I was looking at is we had a ton of unmitigated liquidity below, a ton of stack lows here. Same thing with NQ, a ton of stack lows here. So ideally, I was looking for lower. Um, as you can see here, we have this data wick from CPI. We didn't get much action off CPI. So ideally on market open, what I was hoping to see is price come up, take data, even better if it wicks into this 1 hour fair value gap, then roll over and take out liquidity below. Now, if I show you, let's go to market open here. So here we have ES and NQ. This is that market open. So as you can see, ES is the lagging asset. NQ actually came up all the way to right here is that 1 hour fair value gap. ES didn't quite get there. And this is where I made an error today. So we look, I took my trade on ES and it's a simple fix. Like this is just me not following my edge perfectly. As you can see here, we have one fair value gap two. This candle here, this is where I ended up entering. And where I made a mistake is my entry was I got tagged in here. And my stop was up here. I was targeting down here for about a 1.7. As you can see here, clearly the opening range, we did come up. Okay, there is an SMT, and we did move with momentum, but let's look at this fair value gap. We did not close through it. And we have a lot of bullish momentum on NQ over here. And the reason this happened is, and it's something I've got to stop doing. Typically, I've done it a couple of times. So the 5 minute candles come into a close. Say it's at 4 minutes, 30 seconds, and it's about to close, which like this one did. At the time, it was inversed. So I just put a limit order in to get tagged in on the candle close. Typically, then the next candle will wick into that. I'll get an awesome fill, and we'll see that momentum continue. But I think, especially in these are very, very tricky markets. You need as much full confirmation as possible. That full confirmation today, which I didn't wait for, was just simply to wait the extra 30 seconds for this candle to close through this 5 minute, meaning a close down here, and then put the limit order in, rather than jumping the gun and putting my limit order in and then the candle not closing through, which makes this highly. We have a lot of liquidity up here that I could easily still go to, which it did. So let's just see how this played out. As you can see, we never closed through this 5 minute fair value gap, and it just it moved back up. But there was like directionally I was right. As you can see here, we ended up going down. It was again, this is a really, really tricky price action. Like anybody who made money today, like well done. So anyway, yeah, it ended up like my idea for the day was right. We ended up coming up to this 1 hour fair value gap and then plummeting down to all these stack lows. So like my read on price action was right. My execution wasn't great. And I ended up taking a trade later in the afternoon, which put me in profit for the day. As you can see here, yeah, this is the trade. And the reason I took this was just look like I kind of married my idea of the 1, 2, 3, 4 lows with all these unmitigated fair value gaps below, and this is the trade here, which was almost a 1 to 3. There you go. I got that. Actually got down here. Yeah, it was a great trade, which put me positive for the day. But yeah, overall, this price action is extremely, extremely challenging. So anybody who's having an issue trading it, like, let's just take a look. Like, look, you want to see, this is what a harsh looks like. Like, look at the 4 hour here on either, like, even on NQ. Like, look at this. This is the 4 hour chart. Like, talk about non-directional. This is going all the way back to the 9th. You know, like, it's just this is so tough. Like that was the price action today. Like this is open and close, up, down, up, no follow through, and just edging all of these lows. And even when we get them, we get I don't know what happened there. Even when we get them, we get no follow through. And then like even as you're seeing now, Asia just opened. We're getting this like this is actually great to see. Like some fluidity here and seeing this range, like even this micro range we're in, sort of open up a little bit. But New York AM has been particularly challenging. It's just it's been operating inside, like I think I showed on yesterday's no trade day. We've just been operating inside of London and Asia, which without taking out the London or Asia highs, you don't have much to play off. And yeah, even if we go out to like look at the daily, this is the daily on NQ. Right here is September of 2025. Right now we are at prices that we were in kind of September, October. Like essentially, this is what the last few months have been. We have just hovered in that range. And the only thing with this is when we do eventually break up or break down, it'll be it'll be violent. You know, this almost acts like a coil spring, and there's a ton of shorts here that will have to close out that will drive price higher. So, like better days are coming, and honestly, the market's actually held up extremely well considering one thing a market hates is uncertainty. There's a bucket ton of uncertainty right now, and overall, I think if we just overall like this isn't a market that's panicking, considering like where when was the war announced? Like here, we're basically back at the same like place where when they and even if we look at Bitcoin, like Bitcoin's still at 70K, you know, and even the more risk on us, and look at others, like all of this, like it's not like we're not seeing. I think just so much fear has been baked in, and I also think the market knows like what precedes war: faster rate cuts, more quantitative easing, which in turn leads to a rise in risk assets. I think the market kind of knows the playbook at this point. It looks like it's going to go that direction with with a more dovish head of the Fed coming in just a month or two. Like the back half of 2026, there's a lot of positioning going on now. I think people kind of know the back half of the year is going to be strong, probably into 2027. People just aren't getting spooked. So while intraday has been very challenging, it's not a bad time to be loading up on more longer term positions.